Good
morning and a very warm welcome to our press conference presenting the full year results. After in the last 2 years we've only been able to hold virtual events due to the COVID pandemic, I'm very happy to see some of you as guests here live in the room. We decided that for the first time we are going to offer this in a hybrid format. So apart from the guests here in the room, you also had the opportunity to dial in a virtual format, and also the entire press conference will be cast via the internet as a stream. But non-virtual, but definitely with me up here on the stage, is our CEO, Michael Sen, our CFO, Sarah Henneken, and Helen Gieser in a multiple function today as the CEO of Fresenius Medical Care and also member of the board of Fresenius. And those three will take you through the presentations in the minute, give you an overview, an update on the future at Fresenius, will explain the financial figures, and also give you an update on Fresenius medical care in the course of this conference. If you've dialed in the virtual format, you also have the option of asking questions. There's this small yellow button on which you can click, and if you do so, one of our nice colleagues in the back office will take you through it. There will be a quick check to make sure that your sound and audio quality are okay, and you'll then be broadcast here into this room. And with that, we can start, and over to Michael Sen.
Ja, Sie sehen, bei uns ist
As you can see, many things are moving here, and the things go about in a very targeted manner, and that's what it's all about today. It's great to have you here face to face, to be able to see you here in the room, but of course also a warm welcome to those who have logged in online. Ladies and gentlemen, welcome to Fresenius. Today, I'm going to tell you what we have been doing over the past couple of months and what our plans for the future are, and why we're convinced that this is the right way to go. We've taken decisive steps forwards. Steps to improve services for our patients, but also to sustainably generate value for Fresenius. But let's first look back at the situation at the outset. I started in office in October, and we all agreed that Fresenius needed a reset, a complete restart, both with regard to the priorities and the performance. So we didn't lose any time. We dived right in. We took a close look at the entire company and analyzed our portfolio. And let me tell you, this was a process that was well thought through and conducted with diligence. We had fruitful discussions with all the people involved, with employees, managers, shareholders, the supervisory board, with representatives of the Else Kröner-Fresenius Foundation, and many more. And all of them were on board, and their contributions were pivotal. And we have made important leadership changes. My colleague Helen Gieser, who is right over there, has been appointed CEO of Fresenius Medical Care. She knows the company well, and I'm sure that she will focus on a turnaround in operations, which is urgently needed, together with her team. And she will have everything she needs at her disposal going forward. Fresenius Kabi will have a new CEO on 1st of March 2023, Pierluigi Antonelli. He's an experienced pharma industry expert, and I'm convinced that he will resolutely drive Kabi's development. Human resources, risk management and legal affairs, this responsibility will be extended, and we will add the responsibility for environmental, social and governance, so ESG, and Michael Moser will be the successor to Sebastian Biedenkopf, who is leaving the company upon his own request. And with this, we have laid the foundation for what lies ahead of us. I want to state very clearly that Fresenius needs to change.
Fresenius ist
And Fresenius is prepared for change.
die Zahlen für das abgelaufene
The
Geschäftsjahr
figures for the fiscal year 2022 make clear that this change is direly needed.
und auch der Ausblick
And also the outlook for 2023 clearly shows
von den
the impact of the challenges stemming from the past.
Das Unternehmen hat in den zurückliegenden
For the
Jahren
past couple of years, the company had not set the right priorities.
Portfolio ermöglichte kein
Its portfolio didn't allow us to achieve a convincing overall performance.
im Konzern waren viel
The group structure was way too complex.
Wachstum wurde erzielt, auch
Growth was
Kosten der
only achieved by neglecting returns,
führten immer mehr Schulden,
and ever more debts
immer weniger.
left the company with little room for action.
Es auf den Punkt zu bringen,
So, to put it in a nutshell,
die Richtung
Fresenius had little sense of direction,
unverzichtbar
and
ist.
this sense of direction is indispensable for progress.
Meine Damen und Herren, das alles lässt sich im
Ladies and gentlemen, that's not something you can change overnight,
Aber das ist etwas, das man
but it's something you can tackle if you have a sound plan. And now we have such a plan.
wir nehmen 2023
In 2023, we will set the right tracks,
wieder Richtung.
and this will bring back our sense of direction to Fresenius. It will lead us into the future. I'm convinced that the measures we have now put into place will bear fruits from 2024 onwards.
Ich bin davon überzeugt.
So I'm convinced of that.
Lassen Sie mich daher jetzt darüber sprechen, wie
And let me now talk about what future Fresenius will look like.
Fresenius ist das Herzstück der
Fresenius is at the heart of healthcare. In everything we do, the patient always comes first.
alles noch
And going forward, we will ever more concentrate on offering the best possible therapies to our patients, advancing patient care.
unsere Aufgabe.
This is our mission,
Und darin sind wir heute schon sehr gut.
and we're already very good at that.
Vor kurzem am eigenen Leib erfahren dürfen,
So I noticed that a while ago personally because I visited the clinic in Wiesbaden as a patient. I had an injury at my hand, and I can tell you that I felt very well cared for, and no one, by the way, knew who I was.
Bereiche stehen bei uns im Mittelpunkt.
And 3 areas are at the center of this development. These are areas where we believe we have a great benefit to generate for our patients. And these are areas where we will also be financially successful: medtech, biopharma, and care provision. So this is what we're talking about when talking about future Fresenius. They are platforms for core healthcare needs. They are platforms based on which we will offer world-class therapies. So just think about our photon therapy center of Quirónsalud in Spain. That's one great example of it. And that is future Fresenius' target vision.
Genau dieses
Now we have to implement this vision.
drei Dinge
And 3 things are of the utmost importance here.
strukturelle Vereinfachung
First of
der
all,
gesamten Gruppe.
we need to simplify the structure of the whole group. Secondly, we need to improve our performance. And thirdly, we need to have a clear focus.
Übertragen auf unsere Unternehmen
Translating this to our group's organization, it means the following. Future Fresenius will put a clear focus on Kabi and Helios because both companies are generating values and they cover areas that are critical for a functioning healthcare system. Kabi and Helios serve patients globally and they have attractive market positions. Fresenius Kabi offers a comprehensive portfolio of high-quality, specialized products and services for critically and chronically ill patients, both for inpatient and outpatient treatments, and providing life-saving medication to patients, improving their lives. That is the mission of the Kabi team. We're doing this with a very balanced regional presence in entrenched markets and in growth markets, but also in exceptional situations. Just think about the situation in Ukraine, where the Kabi and FMC colleagues are doing their very best for their patients under unimaginable conditions. So I would like to thank them personally. At Kabi, we developed our 3+1 strategy last year. This means that there are 3 growth areas: clinical nutrition, biopharma, and medtech, and they are based on a robust volume business. Let me elaborate on that. First of all, nutrition. It's a business that boosts our margin and generates revenues of over 2 billion euros. And it's continuously growing because we are enhancing our parenteral and enteral nutrition portfolios globally. And many product innovations are still to come here. Secondly, biopharma. Our majority stake in mAbxience allows us to do a real end-to-end business, and we're looking forward to entering the US market for biosimilars. Thirdly, medtech. Ivenix is the company we took over last year, and they are spearheading the development. Several clinics have already been adopting our innovative system, and we're receiving great feedback. And last but not least, IV drugs and solutions. This is our basis. It's a strongly cash-generating business which provides great value added to patients and healthcare systems. Of course, we will continue to put emphasis on quality and costs here. Fresenius Helios stands for the healthcare services business. Helios and Quirónsalud are already the leading private clinics in Germany and Spain, respectively, and every year they offer care to more than 24 million patients. These are patients who come to us in pain, who need to undergo complicated surgery, and who put their trust in us to deliver their babies. Last year, in our clinics, around 87,000 babies were delivered, and our teams in the clinics are doing an excellent job every day. And they have been doing so, particularly under the strict COVID-19 conditions. So that is why I want to express my gratitude to them. At Helios, we want to use our capital in a targeted manner to generate value-boosting growth. And for Germany, this means that we want to interconnect our hospitals and outpatient clinics more closely. In Wiesbaden, we're currently building one of the largest Helios hospitals, or rather rebuilding it, and it will be state-of-the-art. A hospital with short distances, 22 operating rooms, 6 delivery rooms, and around 1,000 hospital beds. So it is a real lighthouse project showing the future of inpatient treatment here in Germany. In Spain, we're enhancing capacity wherever it is urgently needed in order to meet the growing demand for private care. And of course, we meet this demand. Particularly Quirónsalud will be essential. It will be a leader in digitalizing the patient journey. Fresenius Medical Care and Vamed will be investment companies going forward. Fresenius Medical Care is at the center of the dialysis industry. The company has a strong business with first-class market access and technologies. But the business is different from the one on a group level. FMC will be granted more room for action, and with this they will be able to kick off the operational turnaround and fully exploit its market opportunities. One prerequisite for this is to change Fresenius Medical Care's type of business entity or legal form and to turn it into a stock company and deconsolidate it afterwards. As you're already aware, our supervisory bodies agreed to this step yesterday night. FMC will clearly gain in flexibility, but also in responsibility. With a 32% stake, Fresenius SE will be an important shareholder and an active investor. Naturally, we want to profit from future value increases of our FMC shareholdings, and we have already benefited from that this morning. And that is why I also made it clear to the new management team of FMC how quickly we expect to see improvements in order to maximize the value of this significant stake. Similar to what we have done over the past couple of months, we want to speed up the implementation while acting diligently and dedicating the time resources required to complete this undertaking. Deconsolidation is subject to the approvals by shareholders and the supervisory authorities. And that is why an extraordinary general shareholders meeting will need to resolve to turn FMC AG & Co. KGaA, so the Commercial Partnership Limited by shares, into FMC AG, a stock corporation. And it is scheduled to be held in July, after the ordinary meeting on 23rd May, and later the type of business entity will have to be entered into the German commercial register. Deconsolidation will take place by the end of the year 2023. I'd like to emphasize that with this new and simplified group and governance structure, we have really taken a decisive step forwards. What was unthinkable only a couple of months ago has now become reality. And that is why during our preparations, we came up with the internal project name Gordian. Both companies will immediately benefit from these steps. Fresenius SE's complexity will be reduced and it will gain in transparency by deconsolidating FMC. Our management resources will be focused on the operating companies and our capital can be targeted at growth areas. Also, we will gain more strategic flexibility and additional leeway for action, and this refers to FMC as well. Fresenius Medical Care will have a simplified business structure that allows for faster decision-making. And with this, the management will have greater freedoms to decide how to allocate their resources. In the management team, we are aware that this is a truly historical step for Fresenius and Fresenius Medical Care. Because Fresenius and Fresenius Medical Care had always been seen as one organization. But one thing is key. Fresenius will not lose its character with these changes. It will rather gain in strength and improve its decision-making. Over the past couple of weeks, we've had many conversations and have worked hard to gain trust. I'm pleased to have received the necessary support by our anchor shareholder for our plans. And you can see that Helen and I are going to present these plans to you together. And together with all of our fellow board members, we are backing this decision. It is important to emphasize the target of deconsolidation. This is about more than simply rearranging our organizational charts. We are getting away from structures that had recently prevented both companies from exploiting their opportunities to the fullest. And ladies and gentlemen, this is the cleverest and most elegant solution. Clear structures are one thing and a clear financial ambition is another. This is why we have defined a new and transparent financial framework, which will place clear emphasis on returns. And the most important building block of it will be segment EBIT margin bands and growth bands for our operating companies. They will expressly define our level of ambition, which will guide us from now on. I'm convinced that this methodology of using margin bands will be very effective. It will boost our profitability because all efforts made across the segments will be directed at clear and unequivocal targets. In order to live up to these ambitions, it is essential to continue to cut costs and maintain competitiveness here. We have increased our cost savings target to around 1 billion euros, and a large share of these cost cuts will be up to FMC. In addition, the conclusions we have drawn from revising our portfolio will be implemented from top to bottom. We have identified a number of businesses of which we believe that we are not the best owner. We will divest them in order to streamline our focus and support our balance sheet. And for more details, I'm pleased to hand over to Sarah Henneken, who will, together with Helen Gieser, guide you through the figures for fiscal 2022 and give you an outlook for 2023, the current fiscal year.
Vielen Dank, Michael.
Thank you very much, Michael. And from me too, a very warm welcome indeed. Before I talk about the outlook for 2023 and the contribution of the financial organization to future Fresenius, let me briefly talk about the year 2022. First of all, we have fulfilled our adjusted guidance for the 22 financial year. There was a solid fourth quarter, and we ended the year with a revenue growth of 4% adjusted for currency effects, which confirms the good and sound demand for our products and services. However, group profit without the acquisition of MX Science and Ivenix was down by about 10%, especially given the lasting and continuous inflationary pressure. Cash flow was positive, mostly driven through Helios. Let me now stress some of the important developments within our segments. At Fresenius Kabi, we saw a somewhat weaker first half year, after which revenue growth, especially in the fourth quarter, accelerated. All of the three growth vectors of our Vision 2026, which is biopharma, medtech, and clinical nutrition, have contributed to this. Especially biopharma in the overall year showed a very strong growth dynamic. For medtech, we grew especially over the fourth quarter with a very positive development in the plasma and cell therapy business. The operating profit, nevertheless, was impacted by the high inflation in terms of material and personnel costs. Moreover, during the first half year, we were also affected by supply shortages and supply chain delays. Fresenius Helios saw a very gratifying revenue growth over the full year 22, supported by the decreasing COVID dynamics. Helios Spain saw 4 very strong quarters in terms of revenue and was able to compensate for the inflationary cost pressure. In Germany, especially the first half year saw a stronger influence through the COVID pandemic. From the second half of the year onwards, the capacity utilization in the hospitals improved and was actually above prior year in the fourth quarter. And also the patient structure towards the end of the year was back to the pre-pandemic level. Fresenius Vamed showed slow revenue growth given the overall economic environment. project business was struggling with an increase in cost and negative one-off effects, particularly in the fourth quarter. Our service business showed solid growth. However, here too, the macroeconomic environment showed an impact, which also goes for one-off effects, particularly in the fourth quarter, with a negative effect on profitability. As you have already heard from Michael Sen, future Fresenius will also be based on a new type of financial management, which is the Fresenius Financial Framework. We've defined transparent, ambitious levels for our operating companies and our investment companies. Moreover, we rely on a disciplined capital allocation with a focus on increasing our return. And you can see here where we are right now on the basis of the 2022 financial year and compared to our ambition levels. And from that, we've derived the following priorities for us. First, even more transparency. We plan to organize capital market days for the individual segments in order to sharpen the equity story of Fresenius. Secondly, we want to improve our structural productivity, and I shall come back to that in the following chart. And thirdly, a focused and stringent capital allocation and also an increased focus on cash in order to improve capital efficiency and return. This means no growth at the expense of the return on capital. Rather, we are going to employ our capital very consistently in keeping with our strategic objectives and with a clear priority on the return KPIs. We want to bring Fresenius back to an ROIC corridor of 6 to 8%. This here now are some details as to how to want to improve structural productivity. At net income savings of 152 million euro at group level, we have already exceeded the originally announced target for the 2023 financial year. To improve transparency and to also place focus on the operating performance, we will no longer focus on group result and profit, but rather focus on EBIT. And also, we're increasing our target. Our aim now are lasting and long-term cost savings to the amount of about 1 billion euro by 2025, and that mostly within Fresenius Medical Care. In order to achieve those cost savings, we expect one-off expenditure between 2023 and 25 to the amount of about 700 to 750 million euro, two-thirds of which will impact the year 2022. I've already mentioned this when talking about Helios. The COVID pandemic, although it hasn't fully disappeared, has fortunately eased off somewhat. But still, also for 2023, we have to expect quite considerable headwinds. There continues to be solid demand for our products and services, but we do expect a stronger inflationary pressure, which will put stress on our profitability. The main reason for that is the annualization effect for the year 2023, after especially the second half of the last year was very much characterized by severe price increases. For the year 22, we expect that both personnel and also material cost will continue to go up. The same is true for energy costs, where we do expect at least a partial compensation, especially for Helios Germany. On the whole, we estimate that the additional burden given cost inflation will amount to about 800 million euro compared to the prior year. And also, especially with Fresenius Medical Care, we expect substantially less government support. Also, in view of increasing interests and a refinancing need of about 3 billion euro by 2024, we expect to be confronted with higher interest payments, which will also affect the group result. All of these challenges go to show once again how important it is for us to consistently drive forward our transformation. Now, what is our expectation for the new financial year? Across all segments and at group level, we expect revenue growth in the low to medium single-digit percentage range. For Helios, even in the medium percentage range, single-digit percentage range. Profitability of our segments is measured using our ambitious margin ranges that we defined as part of the Fresenius financial framework I just explained. In detail, that means for Fresenius Kabi, we expect an EBIT margin which, given the continuous inflation pressure, will be about 1 percentage point under the EBIT margin range of 14 to 17%. Fresenius Helios is the only segment which already in 2022 was within its EBIT margin range of 9 to 11%. And also for 2023, we expect that Helios will remain within its margin range. For Fresenius Vamed, we expect an EBIT margin to be clearly below the margin range of 4 to 6%, but which still be positive. For Fresenius Medical Care, we are going to remain in line with the expectation communicated in the capital market, both in terms of revenue and also profitability. And back to group level. Taking into account the guidance for the individual segments, including Fresenius Medical Care, we expect that, adjusted for currency effects, EBIT will remain largely stable or go down up to a high single-digit percentage range. In keeping with Fresenius Medical Care, this has been adjusted for the government support from the Provider Relief Fund that Fresenius Medical Care received in 2022. Without Fresenius Medical Care, we expect a stronger momentum and an EBIT that will be stable or will decline by an up to medium single-digit percentage range. Now, about the dividend. We as the management team are convinced of the long-term strength of our business. And that is why we're going to leave the dividend at 92 cents per share, despite of the decline of the overall group profit for 2022. And this is in keeping with our new dividend policy, which is part of the Fresenius financial framework, which says that the dividend will grow in line with the earnings per share, adjusted for currency effects, or will at least stay at the prior year level. Finally, and in summary, let me once again highlight our financial priorities on our way to future Fresenius. There is a lot of work ahead of us. However, this provides us with a sound foundation for future growth and value added. And with that, I'm happy to hand over to Helen Gieser.
Thank you, Sarah. Good morning. I would also like to welcome you to today's press conference and thank you for being here with us today. It is an honor to be speaking to you in my first press conference as CEO of Fresenius Medical Care. These are exciting times as we embark on the next chapter in the company's history. Let me take a moment to recognize the hard work and dedication of our great teams around the world. Their unwavering commitment to our patients is inspiring. Furthermore, I would also like to express my special thanks to our teams in the Ukraine and in Turkey, who are providing aid and helping our patients on the ground. Before I deep dive into the business, let's take a look at the market and the healthcare environment we at FMC are operating in. First of all, let me talk about some key trends that we are witnessing in the healthcare and specifically kidney care sector. One of the most important developments impacting the healthcare sector is the ongoing demographic change, particularly the aging population. By 2030, the global population over the age of 65 will have more than tripled in 30 years to roughly 1 billion people. Needless to say, this shift has significant implications for the global demand of healthcare products and services. One area this shift affects specifically is that of chronic diseases, such as hypertension and diabetes. We will see even larger increase in the need for kidney care. The number of dialysis patients will increase by more than 400% to over 5.7 million in the same period of time. Good healthcare has never been more important. Let me now outline our strategic aspirations. As the new CEO, my overarching strategic aspiration is to unlock value as the leading kidney care company. Only as a strong and profitable company will we be able to live up to our mission. And I would like to share the key elements of this roadmap and how we will achieve this. To start, the right structure is key to our ability to unlock value, and we have taken important steps to simplify and optimize our structure. We have now fully implemented our new operating model, comprising 2 global segments: Care Delivery, our healthcare services business, and Care Enablement, our medtech business. This new operating model not only provides increased transparency internally, but will also bring enhanced transparency to our external financial reporting. As Michael Sen has already outlined and announced yesterday, Fresenius is planning to deconsolidate Fresenius Medical Care. The resulting change in our legal form will create a simplified, more agile, and efficient governance structure that will strengthen the rights of our free-float shareholders. Another critical step is taking a more rigorous approach to capital allocation. We have implemented a disciplined financial policy to drive the much-needed improvement of our return on invested capital. We are also focused on driving operational efficiencies. I am really proud of what we have accomplished to date with our FME25 transformation program, which we will now further accelerate and extend. Additionally, we are taking a hard look at our portfolio. And finally, none of these measures will be successful if we don't have a winning culture in place that fosters accountability, sustainability, as well as diversity and inclusion. Our new simplified operating model went into effect as of January 1. Our 2 global segments now have complete end-to-end P&L responsibility. This new structure provides increased transparency and allows a direct peer comparison. It also enables us to drive targeted business performance improvements. And with our globalized and fully allocated G&A functions, we have the flexibility to scale these functions as needed to provide an appropriate level of support to the respective segments. For me, it's truly remarkable to see the difference the new structure has already made, particularly around visibility and transparency. The new model also positions us to truly realize the full extent of benefits from our vertically integrated business model. Simplifying the structure is an important step. With a proposed change of the legal form to a German stock corporation, we would move from a controlled structure with several decision-making boards to a standard German 2-tier system with 1 supervisory board and 1 management board. This simplified governance structure not only strengthens the rights of the free-float shareholders, but has important business-relevant benefits as well. This governance structure enables faster and fully independent decision-making and provides more optionality on our future strategic direction. The change also frees up time and capacity of the executive and management team, and it also avoids potential conflicts of interest within the group. The new legal structure enhances our flexibility to manage capital allocation and shareholder returns. It also provides us with an unrestricted approach to access capital markets, and we only expect limited pressure on our ratings from this conversion. Consequently, we would move from an indirect co-determination via the Fresenius Supervisory Board to a direct co-determination, which would allow the representatives of the employees to fully focus on Fresenius Medical Care. There will be some negligible dyssynergies, additional activities, and some costs needed to convert to the new legal form. And for this purpose, there will be an extraordinary shareholder meeting, most likely in July, where the final decision will be made by our shareholders. We expect that the entire process of the conversion into a German stock corporation will be completed by the end of this year. Additionally, we are working towards strengthening our financial position with a disciplined approach to capital allocation and improving our return on invested capital. Given our current leverage position and the high interest rate environment, deleveraging is our primary capital allocation priority. In accordance with our dividend policy, we adjust the dividend in line with earnings development, and the dividend is proposed to be reduced by 17%. We continue to be fully committed to the dividend policy and to create shareholder value. Finally, with a laser focus on driving organic growth in our core portfolio, we will be limiting investment activity, minimizing acquisitions, and strictly managing capital expenditures. I am very excited about what we have achieved to date with our FME25 transformation program, as well as the extended opportunities to improve profitability. With particular progress in the fourth quarter, we accelerated our FME25 program, delivering sustainable savings of 131 million euro in 2022, outperforming even our own expectations. And we have extended the scope of the program, largely comprising additional opportunities to improve the profitability of Care Enablement, which has been heavily impacted by inflationary pressures. We now expect sustainable savings of up to 650 million euro by 2025, with one-time costs of up to the same amount. With our new operating model in place, we now have clear line of sight and the leadership accountability in place to drive performance, and now to run the segments like the two separate businesses they really are. This will allow for further operational efficiencies and portfolio optimization beyond FME25. On this slide, we have outlined our path to unlock value in each of the operating segments. In Care Delivery, our turnaround efforts are focused on productivity and efficiency measures. In the US specifically, we are focused on labor stabilization, growth, and improving operating leverage, and have already started clinic closures. We will streamline our portfolio by exiting unsustainable international markets and divesting non-core service assets. In Care Enablement, our product margin has been severely impacted by the macroeconomic and supply chain pressures and is falling short of our aspirations. To improve profitability, we are focused on pricing initiatives, productivity measures, as well as reviewing our manufacturing footprint. We are also taking a hard look at our product portfolio and are in the process of rationalizing our global R&D programs and divesting non-core product lines. This will enable focused capital allocation in the future to the areas of higher profitable growth in the core business, and proceeds from these disposals will be used to further deleverage. I am confident that these actions will lead to the much-needed recovery of earnings growth. With that, let's move to the review of 2022. Fresenius Medical Care's business has been facing many challenges since the beginning of 2022. COVID-19 related excess mortality, the macroeconomic inflationary environment, and the ongoing labor shortage is continuing to put pressure on the business. Despite this challenging market environment, we achieved our revenue targets. In 2022, we continued to deliver organic growth. Currency effects extended our revenue growth to 10% reported and 2% at constant currency. In line with expectations, our operating income declined by 13% on a constant currency basis and before special items, and our net income declined by 17% on the same basis. Now I would like to move to our full-year outlook for 2023. As always, our outlook is in constant currency and excluding special items. In 2023, we expect low to mid-single-digit revenue growth. On the adjusted basis, we expect a flat to high single-digit percentage rate decline for operating income in 2023. And while 2023 will be a year of level setting, we are confident in our path to unlock value as the leading kidney care company. We expect to come out of 2023 stronger and well-positioned to drive sustainable, profitable growth with a recovery of earnings growth in 2024, and by 2025 with an improved profit margin of 10 to 14%. I am proud of the progress we have already made in the transformation of Fresenius Medical Care. With the new corporate structure, the proposed change of legal form, and the business improvements we are already working on, I am confident that we will unlock value as the leading kidney care company and open a new chapter in the history of Fresenius Medical Care. Thank you for your time this morning, and now I hand you back to Michael.
Ja, vielen Dank, Sarah, vielen Dank.
Thank you, Sarah and Helen. Ladies and gentlemen, a difficult year lies behind us, in which we have had to overcome severe changes and challenges, both in the world and within our company. These complex geopolitical and macroeconomic conditions will continue throughout 2023. No one can precisely predict what will lie in wait for us this year in terms of political and economic developments, monetary policy, or trade and commerce. But we will again manage it with concentration, focus, and commitment. At the same time, Fresenius will be future-proofed. It's a great company with highly committed employees and huge potential. We have set the right tracks, and these will allow the company to regain its sense of direction in 2023. In 2024 and the following years, we will then benefit from it. We will have simplified structure, the FMC turnaround. We will see Helios's continued success and Kabi's new momentum. We will also have cost savings and a decreasing interest burden. So all of these will be the indicators telling us that Fresenius is living up to its full potential and that it is well on track to become one of the best healthcare companies globally. We have taken the first step today, and now we very much look forward to answering your questions. Thank you.
Thank you very much, Michelsen, Sarah Henneken and Helen Gieser. And now we turn to your questions. We'll start here in this room, taking questions from here, and I'll put on my glasses to make sure I can see you correctly. And nevertheless, if you do ask a question, may we ask you to briefly state your name and the number of the publication you work for, so that also the participants in the web stream are up to speed. And if you want to ask a question here in the room, just raise your hand and we'll pass a microphone your way. I can see there's Mr. Burgan. Maybe we'll start with him, a bit in the back. Thank you. My question, which mostly goes to Helen Gieser, I think. German or English?
Either way, okay, I'll switch to English.
Gut, dann frage ich mal auf Englisch.
To optimize the portfolio within FMC, can you specify what you consider non-core services, healthcare services, and non-core devices? Because and over maybe quantify the volume of divestments, and also maybe there is clearly a need to invest in the company. There is home care push, there is digitalization with devices, there is value-based care pushes. So there is clearly a high indebtedness combined with the need to invest, I would assume. So maybe you can elaborate on that a little more. And secondly, if I may, a company with 70% business in North America, why would it be headquartered and listed in Germany?
Yeah. Thank you for your questions. So me and the management team have taken a hard look at the portfolio. And now that we have our organization aligned truly end-to-end on products and services, we can really look at the margin contribution that those are delivering, and also look at the assets within those portfolios and the returns and profitability of them. We will have a capital markets day later in April, where we will speak more about how we are going to expand the margin path for products and services. But specifically to your question about the assets, within healthcare services, we have some complementary assets around care coordination, and we are looking hard at those to say, in this current environment, is it as close to the core as we would like, and can we drive the needed profitability we want? Obviously, more to come on that as we announce them and execute on them. On the product side, you're absolutely right. The key for us is innovation and digitalization, and we want to make sure that our product portfolio of the future is meeting those needs. So we're taking a hard look at our R&D programs, as well as maybe the current product portfolios, to say, is there something there that we should divest? Because maybe we're not the best owner of that asset, but make no mistake, the big core of our dialysis services and our dialysis products, that is still core for us, and that's what we will focus on turning around the operational performance on. To your second question, yes, we have 70% of our business in the US on dialysis services, but I also want to remind you we are a large global products company as well, and the majority of that business comes from our European region. I like to think of ourselves as dual headquartered, both in Germany and the US, and that's where I spend I spend a lot of time in both places. And I think we have to appreciate that these two businesses are different, have different needs and different geographies, and we don't see that need to change at this moment in time.
Thank you. We move on with Ms. Ettel, seated here in the second row. Thank you very much. Yes, you can hear me, can't you? Yes, okay. My question about Helios. The plans you've just presented, is the public offering off the table with that, getting it listed? And also, from the way it seems now, you are ending your existence as the aristocracy of dividend payers for both entities, Fresenius and FMC. What was the decision, the background of that decision? Is it no longer that important, or why go for it? And next question on savings. Could you also elaborate on whether that may go along with an FTE reduction, and if so, along which lines? Thank you. Thank you, Ms. Ettel. Thank you. And I'll start answering the first two questions and hand over to Ms. Henneken regarding the savings question. Now, regarding Helios, I could be brief and say yes, but let me elaborate a bit. We have a very clear direction that we published today, a true strategy. And a strategy means that you announce and communicate, and everybody in the company knows what are the priorities, what are the fields that we want to be positioned in, what are the areas in which we want to make a profit. And that follows a certain logic, because we, of course, rely on our areas of strength, where we are already very good and very strong. Those are the areas that we want to develop further. And that, amongst others, includes exactly those types of business that invest and pay into the future topics of therapy. Therapy, when it comes to the overall patient journey, makes up the majority part, about 70%. You've got prevention, diagnosis, and then anything that comes after therapy, aftercare and palliative care. So it's a highly attractive field with lots of growth and profit potential. And that's exactly why we have businesses which are very well positioned already, with different orders of magnitude, say, and it's quite fitting. And by the way, we're not thinking in terms of Kabi and Helios here. We have got a portfolio analysis that comprised the entire company and we broke it down into 28 businesses or units, you could say, and plotted them on a portfolio matrix and looked at how each individual one of those businesses can develop further, where it is and what it takes for it to develop further, and how the businesses are interrelated and how they're doing compared to each other. And when looking at the trends I've just described and incorporating them as well, it becomes clear that a large part of the businesses and activities of Helios and Kabi are extremely well positioned. They're already creating value, and they've got the potential of creating lots of more value looking ahead. And that is why that'll be the focus of what will then be our capital allocation. And there's even quite a healthy mix in that, because it means we've got stable growth prospects for Helios that we combine with growth platforms that allow for higher increases with Kabi, and we'll combine those two. And so, at the very core of our strategy, of one of the two platforms we mentioned, care delivery, what it means is nothing else than providing healthcare, and that can be modernized. We are already working on that and are doing quite okay, and that is why Helios will remain a core of our strategy. And we're moving away from some kind of transactional considerations and financial engineering. We are looking at what fits our strategy, and Sarah Henneken explained the financial ambitions to go with it. What's a good fit with our financial ambitions? And that is what we're going to focus on. And by the way, I told you that I listened very closely over the first few months. One of the largest points of criticism ever voiced was the complexity, and we're addressing that with a step that we're taking for FMC today. Now, getting Helios listed would make it all the more complex, so no, that's off the table. The aristocracy of dividend payers, you said. Well, our key headline was reset. And I'd explained to you that the need for change, and you saw the chart on it, is, I think, more than obvious. And when you go through all that I took you through, at the end of the day, higher debt level and ever less wriggling room, so to speak, then you've got to see where you want to invest capital, where you want to inject capital, and where you might want to take it down a notch. But still, and that's important for the dividend, we still want to communicate confidence. So yes, it is a bit of a reset with a decrease in net income. Our net income went down, and we're still paying the same dividend as in the prior year. So we are decoupling the dividend payment from that kind of basis. So I would actually dare to call us as still belonging to the aristocracy of dividend payers. And looking ahead, we just explained that we're going for a progressive dividend policy. And that we do that is to express this very confidence that in the years 24 and onwards, things will take their positive turn. Sarah? Yes, I'll take over then to answer your question on savings. I think, firstly, we've got a savings program that's already up and running. With those 152 million, we were able to achieve the target that was originally set for next year, and we've thus overachieved it already this year. And also, in view of the substantial headwinds we were facing, we've yet again increased that savings target. So we're now working with a 1 billion savings target by the year 25, and the largest contribution to that will indeed be from Fresenius Medical Care. These structural matters and issues, also under these renewed cost and savings targets, have not changed in any dramatic way. For example, when it comes to purchasing and sourcing, it's still about being a lot more consistent and stringent about it, to combine things and to consolidate. It's about general admin expenses which are to be reduced by, for example, harmonizing, standardizing processes, digitalizing processes. And here, especially Fresenius Medical Care are going to butt in with their global SG&A model. But it's also about modernization at Helios. And if I look at Kabi, it's also about portfolio restructurings, about withdrawing from very small markets, as we've done in 22 already. And it's about, for instance, with Vamed, about looking at our global footprint and also untapping efficiencies here. And at group level, it's about looking at IT and approaching it in a structured manner. And in 2022, we've made substantial progress in that and will continue to work on it. Also, real estate is something that is part of our cost savings program.
Thank you. Ms. Dorstedt of Süddeutsche Zeitung newspaper. I want to follow up on something, because the question was, will there be any layoffs because of these cost reductions? Yes or no? And if so, to what extent? And next question, if Vamed and FMC are now investment companies, how long do you want to hold on to these investment companies? So for several years? Or would you say that after some years of transition, 2023, 2024, you could even imagine separating yourselves from them? And is it wrong to assume that after deconsolidation, Ms. Gieser will cease to be a member of the Fresenius management board? Because it wouldn't make much sense, right, for her to stay. And now that you have realized that a share corporation is quite elegant, for how long will Fresenius itself remain to be a KGaA, or will it also change its legal form? Okay, so let me start, and then maybe we can address the costs later on. On the last element or last question, there are no plans here. We only want to change things if we can improve. So that was also what we had perceived as criticism. Having a subsidiary that is listed and then a parent company, our structures were set up in a way that we couldn't live up to our full potential. And that refers to both of us. And your second assumption, of course, you're right. I'm not sure if she no longer wants to be a member of the board, but of course, it's just the logical consequence. We want to simplify our structures, because otherwise we cannot state that we want to save management resources and save up their time here and to focus them on the respective business units. So indeed, Ms. Gieser doesn't have to come every 2 weeks to the board meeting of Fresenius SE. And that is something I'm saying very seriously. As a board member of Fresenius SE, you have to look into all the topics relevant, because you're a board member, you're responsible. So she has to look into Helios, Kabi, and Vamed's topics as well. And that will no longer be the case. So indeed, that is just the logical next step, and it is our target, just as you have described it. And also the changes in the leadership we have announced this morning, they make sense. I mentioned it previously. We want to have a comprehensive picture here. Now, on Vamed and FMC. Indeed, we are no longer trying to find a solution in transactions. The changes we are implementing are based on having a simplification, boosting performance, and a clear focus. So these are our guiding principles. And we are disentangling things in order to make the most of our strength. And Ms. Gieser has now explained that Fresenius Medical Care has a highly attractive market. For kidney diseases in end stages, there is no other therapy. There is only dialysis. That's the only way to go. And Fresenius Medical Care is an international market leader. And with the new management team, with the new leadership, we have devised a clear plan in order to unlock value. And once we do that, the value of our shareholdings will also increase without us having to invest operational resources. And that is a great situation. This is something we wanted to emphasize today. We will remain to be a shareholder. We will keep 32%. It is one of our major stakes, and we're going to actively accompany it. But if the value increases, then of course we will benefit from it, because also our value increase will be included in our assessment. So, yes, it is also true that there are other shareholders with Vamed, and also here we want to have an investment company. We want to have a stake in this company. It is a very large first step, and as I have mentioned a couple of months ago, it would have been unthinkable. It is really a fundamental change in our management, because as an operating company, you are more integrated in the board. So this is the first step we're going to implement. And all of our business units, by the way, are increasing their revenues, but they will have their specific plans they can concentrate on. So now on costs. Yes, I think it's important to emphasize that the cost reduction program is based on previous communication and what we had announced previously. So it is ongoing, and we are focusing on the processes, on general administrative expenses, but also on efficiencies in procurement. And beyond that, portfolio optimization is an important topic also for Fresenius Medical Care, as Helen Gieser has mentioned previously. And also transparency with care enablement, care delivery. We believe there will be further opportunities for cost savings here going forward. Thank you. We will have one or two further questions from the room, and then we will take an online question. So, Mr. Hennig of Bloomberg in the third row. Yes, good morning. Now the question on Helen Gieser has been answered, so only one question, Mr. Zen. You have mentioned that there's a handful of assets which has been defined for divestitures. Will Vamed and FMC be included in this handful of items you have identified, or not? So can you maybe elaborate here? Yes, good question. And what Ms. Gieser has mentioned, that was not included here. So we don't want to calculate for it wrongly. Ms. Gieser has her business and we have ours. So that's what I mentioned before. The result of Vamed in the previous fiscal year, if you have looked at that and if you have looked at our outlook for this year, you will see that Vamed is currently still performing below its potential. So we will closely look at it, we will monitor it, and there is still a lot of work to do here. And that might also answer the question from a different angle. I had mentioned a handful of assets, and we have also hinted at the fact that they are in the three-digit millions, and if you add this up, of course, you won't get Vamed as a result. So it's not Vamed I was talking about. But there are other elements in our portfolio that qualify for it. But you will understand that today we cannot talk about possible divestitures. We just wanted to make clear that we're resolute and we will act here, because this goes along with our two targets of having a stricter focus and supporting our balance sheet, and that will free up more leeway after 2024. Thank you. And as I have mentioned before, now we are going to have Rancha Ginges from a Spanish EFE news agency.
Hallo, guten Tag.
Hello and good morning. I have a question because yesterday a Spanish newspaper reported that an investment fund was preparing a certain purchase, which was inaudible, apologies. What's your comment on that? And as for the results of Helios Spain, could you comment on those, please? Eogen, is that part of Helios or is it part of fertility?
Vielen Dank.
Thank you. Thank you very much, says Michelsen. I'll take your questions backwards, so to speak. And I just said that we are not commenting on sales activities of NFR assets here in the course of this press conference. We'll communicate it when it's done and over, so to speak. I read about this Kieron Salute piece as well, and I'm happy that you yourself arrive at the conclusion that that's definitely off the table. It's only if and when financial sponsors are interested in an asset that we look at what is the quality of that business. That is what counts, and in that case it is very well suited in staying with us, and that is the case because it first fits our strategy, and secondly because we know what we're doing. I wouldn't know what any financial sponsor could do better than us when it comes to managing hospitals. So with that, I couldn't agree more with you. That's definitely off the table. That's the Helios Spain question. Sarah? Yes, the performance of Helios Spain. I was brief on that in my statement. Helios Spain had a really good financial year in 2022. Strong growth for the full year of about 9%, and also a very gratifying margin of 12.5%, so actually above the Helios total margin range. Over those 4 quarters, we've got to say that, and also when you look at the impact of COVID, we've seen that the Spanish market, or say the COVID impact in the Spanish market, is quite a way ahead of the one here in Germany in terms of monthly courses. So that is why Spain really saw 4 very sound and solid quarters. Every single quarter was a good one. We had a good capacity utilization in the hospitals. Both patients were no longer impacted heavily by COVID, and also our own staff structures were fully back, so to speak. And that's why we have this very good development in Spain, which is obviously reflecting well on the overall and total result. Thank you very much to Ms. Ginges from Spain. There are no further questions online, so we'll continue here in the room. And that is for Ms. Tergeder of Handelsblatt. Yes, thank you. I'm still asking about layoffs or FTE reductions, because so far the only thing that was communicated, and that was the case past year, that at FMC until 2025, 5,000 FTEs were to be cut. There are figures that, amongst others, we researched that for Kabi, there can be up to 2,000 FTEs to be cut. And you've just published that it's to be 2,000 less employees across the entire group that you have now as compared to 21. But with Helios and Kabi, you've actually built up FTEs, certainly due to the acquisitions. I'm simply asking for a concrete figure, please. Again, let me repeat at this point. We've increased our cost savings program, and you can see that one of the main drivers in that is Fresenius Medical Care, and has been. So it's a question I'd like to split, if you want, and also ask Helen Gieser to comment on it afterwards to explain about her cost-saving program. For Fresenius as a group, without FMC, I can tell you at the moment we are focusing on the rollout of the plan, as it were, and as the structural topics are to be addressed with his now increased plan. And the portfolio affects the stronger focus on digitalization, harmonization process. With that, over to Helen, please.
Thank you, Sarah.
Ja, danke, Sarah.
FMC has already communicated that we would have job reductions of up to 5,000, with around 750 in Germany. Those numbers still hold, even with our increased efficiency numbers. So we are still, of the 650, up to 5,000 with 750 in Germany.
Vielleicht, Frau Telke, lassen Sie mich das auch nochmal einordnen.
And maybe another comment on this, says Michaelsen. The increase mostly goes to FMC of 500 up to 650. Secondly, we now can use levers that we simply hadn't identified previously, portfolio adjustments. And Helen Gieser explained that and elaborated on that in her statement. Moreover, we, and this is mostly Kabi now, are applying the same kind of intensity, because you know very well, if you look at Kabi in an isolated way, they actually overfulfilled their cost savings target, and those roughly 2,500 you mentioned, and I think you were the first ones to take this up, actually, and with the social partners, we've already finalize the dialogue, if you want. Agreements are in place. So there's no additional massive cost-cutting need to be catered for, meaning that all employees have to get nervous now. And that's not necessary at all, because we need to take action where it's needed, and that is mostly at FMC. And that is why the large share really falls to them. And with the others, we're using the same ambition, say, and maybe the ambition of sometimes even overachieving targets. But Helios, if you look at it today, and as Ms. Henneken explained, is well within the margin range. And the margin range is derived from leading companies. And by the way, Helios happens to be the leading company if you look at a peer comparison and the competitor basket. So that's why you need to look at it in a slightly more differentiated way. Then, here to my right, Ms. Casella of Plateau Brief. Mr. Sen, you just said it's a logical consequence, or would be, that Ms. Gieser would then leave the group board. Why then is Mr. Wastler of Vamed still on that board? Because that would be the same logic, because the operative development at Vamed also was a negative one. And why, for instance, didn't you decide that the ESG segment or area should be established as a separate unit? The answer? Well, firstly, Ms. Gieser is still there and is still on that board, so they're all still on it. But let me give you the logic once again. Our logic is not somebody's an underperformer, so we put them in the left or right-hand basket or whatever. No, it's derived from our strategy. Where are our fields of strength? And I explained about that. 28 fields and areas that we identified and how they're performing in direct comparison and interrelation, and who's in a very strong position already, who's already creating value. We just heard about Quirónsalud Spain, how attractive they quite apparently are. And especially with scarce funding, they are to be given a stronger focus. And that's also something I explained. The business model is changing. We're not buying growth, and we're not buying profit and revenue contribution. It just fills up your balance sheet, and then you have the kind of wriggling room we have at the moment. That's one thing. Secondly, there is a difference between Vamed and FMC, because Vamed is a majority shareholding. We hold, is it 72? 72%, whereas with FMC, and that's the very point of it, without 32%, in terms of accounting, once it's all done, it's an at equity shareholding. So we'll have a proportionate number of seats on the supervisory board because it is a key shareholding, simply given the size and also given the attractiveness. But that is a difference. And again, the logic, who goes into the left and who goes into the right basket, no. And the business, or say the management model, is changing. And once we're there and say, okay, we've got to be even stricter and focus the management board to the operating companies only, then it's something I wouldn't rule out here and now, but let's get started first.
All right. So let's continue here in the room, and later we will have another online question. Yes, Mr. Sen, you have just mentioned that you're not purchasing revenues or income, and Mr. Stumm, the situation was different. Does that mean that the times of large deals are over, or what are your plans in terms of anti-competition law? It might be difficult, so only Kabi might be a candidate here. So could you elaborate, please? Okay. So I am going to explain future Fresenius, and that's also what I mentioned previously. It's about these two areas with a great therapy focus. And I had also explained how you can derive that from the patient journey. So it really shows the overall universe of the healthcare industry, and we want to concentrate on the lion's share, on therapy. So here we have to identify the largest players, and the result is Kabi and Helios. So with a clear direction and a strategy, we will manage this company. We will not manage this company based on transactions. Transactions are usually a tool that serve a purpose and a strategy. So if you look at our balance sheet, at our level of indebtedness, and I want to make sure our return on capital employed, or our invested capital, you can see that on the first page. So that is something you should compare to the capital costs. And if you compare these two figures, then I think it becomes very clear that there is little room for large deals. And irrespective of that, deals always serve a purpose, to follow a strategy, to entrench a strategy. And now look at our current portfolio. I had mentioned previously that all of our companies are growing. And they are growing organically. Helios had enormous growth. And Ms. Henniken has also mentioned that. She elaborated on Helios Spain. It is astonishing. And also in Germany, we can see again, looking at the patient figures, that we're getting back to pre-COVID-19 levels. So there will be growth. Kabi will grow. And if you have such companies that are growing organically, these are healthy companies. If then after 2024 you are in a different situation possibly, and if you have to change your priorities, then you can of course consider if deals might be an option to strengthen the strategy. But the order is clear. Okay, thank you. Marlene Ehmann, who has logged in online of Finance, and afterwards Mr. Balzer of Frankfurter Allgemeine Zeitung. Yes, hello. I would like to know if there are any plans to have an adjustment of the guidance during the year once the deconsolidation of FMC is closer, or if it has been decided, or if we will get that only at the end of the year once everything has been completed. Of course. So today we issued a guidance based on the EBIT without Fresenius Medical Care in order to give you a feeling for what the development will look like if deconsolidation was to happen. And throughout the process, we are going to update you on the timeline for 2023. So, of course, we're going to give updates here. And the Fresenius Group without Fresenius Medical Care, we are also going to present that to you, because there will be changes to the balance sheet, to the profit and loss statement, etc. Currently, Fresenius Medical Care is fully consolidated, and after deconsolidation, it will be held at equity. So, of course, we're going to inform you once we're progressing throughout the process. But for us, it was important to point out and to give you an assessment of the EBIT, so of what we're expecting for 2023 and what we're expecting for Fresenius Group without Fresenius Medical Care. All right, thank you very much, Ms. Ehmann. So, Mr. Balster. Thank you. In the outlook for 2023, you have referred to contributions or public contributions for Helios and FMC. So what legislative initiative are you referring to, and what is the volume here? Let me explain that. So as a company, overall, in the context of the COVID-19 pandemic, there were a number of laws that allowed us to receive government grants, and the provider relief funding for Fresenius Medical Care, amounting to around 280 million, played a role here. So in 2022, FMC received that, and in 2023, of course, they will not receive it. And when we formulated the outlook for 2023, we obviously deducted this figure. And I also pointed out the increased costs, the cost pressure we're noticing, also cost increases looking at energy prices, for example. And at least here, we expect there to be a partial compensation for increased energy costs of Fresenius Helios in the context of the law that has been passed for hospitals here.
Gibt es weitere Fragen?
Any further questions?
Volle Schönheit, oder?
Doch da.
Yes, Ike Henning.
Hier nochmal eine Spezialfrage.
Yes, a specific question on FMC. Did you also review other alternatives, so alternatives to deconsolidation? You could have a co-complementary, for example, or was that not within the leeway of the legal construct? You are smiling. Why? Yes, because I'm grateful about the question. Yes, there was a reason why we said that this was the smartest, the cleverest way to go. Before we publicly communicated future Fresenius, of course, we read through a lot of information. We also received a number of unrequested advice. And then we heard, well, sometimes divesting was on the table, etc. But there is one fact. It is the only option we have. If you no longer want to be in control, you would have to divest. You would have to sell it off, and you would have to get below the 27%. That doesn't make a lot of sense looking at the share price, and I think also our shareholders would not be happy about that, because it would be a value leakage. That's how you call it. And secondly, there would be a change of control clause that would enter into effect, and FMC would immediately have to refinance their liabilities. I think that's a very difficult endeavor. So trying to refinance all of your liabilities in particularly in these times of increasing interest rates. So just selling it off, divesting it, that's not possible. And then the second option, which you have mentioned, you can spin it, for example. And if you spin it, you would have the same situation with the change of control. So also here, all the liabilities would have to be refinanced. And then this control that we have via the structures, which is a financial control, by the way, so we don't have a control agreement here. The question is, can we sell part of it off? Are we going to give something away without a value? No, you can't do that. You can only do that if you will find someone to buy it with this control, but then they would have to make a takeover offer to all shareholders and with the same premium. That is something that has been laid down in the Articles of Association. So that's why I stated it. We seriously thought about it with a team throughout nights, from bottom to top and from left to right, until the Gordian knot was really resolved, because this is the only way. And this then had the consequence of entering into intense dialogue with the respective players. That's something we were happy to do, and I'm grateful for it. I also mentioned that today because we talked to the anchor shareholder or with the foundation. But that was the only option we had. So you can't really sell off control partially or individually, because it is bound to the structure. And if you want to overtake control, you have to overtake the entire company. And this morning at CNBC, I was asked, can't you have a private equity here? But then you would have to take over FMC as a whole with a premium. So I'm not sure if there is someone out there who could do that. So that will really show you what I'm getting at. I called it Gordian. And that is the smartest option we have. And in addition to these benefits, both companies will get from it. And your question now, if we retain the company, will we profit from the increased value of FMC? Yes. So once this is through, we could divest if we wanted to without negative consequences. So once this is completed, but I have mentioned it and I'm going to emphasize it again, we want to continue to be an anchor investor because we want to participate in the increased value. But after this transaction, of course, we have more options. So for us as Fresenius SE, we have a lot more options on the table to see what we're going to do with our stake. And that's why I can only emphasize again, we really were proud of the solution we have come up with because it is the smartest one.
Thank you. We'll move on to the online questions again. There are two, one by Klaus Bohne of Plato, then Gujram Dövs, KMA. Yes, good morning. I hope you can all hear me well. I'm in a rural area. There's not always great Wi-Fi, but I hope it works. I have two questions. First, regarding the return on capital. ROIC, you gave a 6 to 8% range. Previous year, 5.1%. For this year, you say 1% less. So at the upper end of that range, that would be a doubling of the return you plan for 23. But from my point of view, that's still not very ambitious if you compare it to the cost of capital. Could you elaborate on that, please, for me? And second question regarding margin development. I'm looking at the two remaining operative segment as Helios, 1/3 of sales, 1/3 of EBIT, a margin of 10%, which is good, but it's a segment, hospitals, we all know, it's not always easy to substantially increase any margin. So doesn't that mean that the main stress for margin development lies with Kabi? They currently make up 1/3 of the EBIT, have already a margin of 16%. Is there a lot of room for improvement at all possible? Michael Sen. Ms. Henniken will answer this in a second. Let me just make a quick remark on it. I'm actually grateful for that question, particularly the first one regarding the comparison of return on capital and how they've developed those KPIs, because it's true. The target of a return on capital of 6 to 8%, if I were to look at that in an industry average or compare it to other companies, it's not excessively high. But that's precisely the result if you buy in growth. Because that was a question earlier, no deals anymore. If you go for deals and what comes back from them isn't quick enough, isn't good enough, and it always costs a bit, it always comes at a premium. And that's why I was stressing this so much. We are now strategy-driven and not deal-driven. If a deal fits the strategy, we'll go for a deal. If and when we've got the room to do so, but it's got to fit. Just like last year, mAbxience and Ivenix. So much on capital return from me. And regarding the margin ranges, before handing over for the details, I also told you it makes for a healthy mix also in terms of quality of the value flows, so to speak. Because Helios is already the margin leader, you're quite right. So a margin expansion for them is certainly going to be more difficult. But at the same time, simply keeping the margin and growing the revenue also means you grow by definition in terms of profit. And with Kabi, we talked about growth platforms. And Kabi is an industrial business, also quite right, different from running a hospital. So an industrial business. So say if and when things get back to normal, inflation and the lot, but say 24 compared to 23, I can't see that there's yet more inflation pressure to come. I've got that from 22 to 23. But once that is more back to more or less normal, then with an increase of sales and revenue, and Kabi has a very nice sales profile given the portfolio mix, and then we expect also a margin expansion. But the details on that I'll leave to Sarah Henneken. Yes, I'll happily do that, and thank you also for those questions. You are absolutely right regarding ROIC. With the current ROIC, we cannot be happy. And it is actually also below our cost of capital, which is not satisfying. And that's precisely why we've got the financial framework now. That is why we say focus. That is why we say a stronger focus on return, a stronger focus on capital allocation. Because those are the two elements that can help push ROIC upwards again. And it takes time. It's not going to be something that happens overnight. Nothing of what we're doing on this financial journey ahead will happen overnight. It's the focus that we now need to apply. We've provided the basis, the foundation, and so to us the year 2023 is a bit of an inflection point after which it will go upwards again and will need to go upwards again, no question about it. This range of 6 to 8% was defined as our ambition level, and we want to get into that range. What happens afterwards, if and to what extent we revise it upwards, that's currently not the focus. It's back into that range, and that requires work, that requires the focus on capital allocation and strengthening returns. Let me also say a word about these margin ranges, because that's very much the focus on return as well. That's exactly this ambition level to say best in class. And I'd also like to come back to what Michael Sen just said. Helios, if you compare it to peers in Germany, Spain, and in the wider context, is best in class. So it's not surprising to see that already now Helios is already within its ambition margin range, because Helios is performing as a care platform at already a very good level. But again, increasing revenues, and we saw that. We saw recovery at a time where the pandemic was flattening out. Especially in Spain, we saw what the performance can be like when the hospitals can operate at full utilization again, at full capacity, and also with a patient structure that is back to the pre-COVID structure. So I'd say looking at Helios, that's a soundly stable business with growth potential on the revenue side, particularly in Spain, where we continue to see high demand. Moving over to Kabi. For Kabi, we said our expectation is that Kabi will likely end up 1 percentage point below the ambition margin range of 14 to 17%, so somewhere at around 13. Looking at that and looking at how Kabi did in 2022, you will also see that for the next year, and especially given the inflation pressure, we'll continue to see pressure on margin as well. In 2022, Kabi was dealing with supply shortages, delivery bottlenecks. Things are improving there, but when it comes to material costs, personnel cost increases, we see that also for 2023, we'll continue to see pressure on margins. Nevertheless, looking ahead, there is our Vision 2026 with our 3 growth vectors. And those 3 growth vectors, and that's important for me to stress here, for them, we see strong growth. Biopharma really, for the entire year, showed very good growth rates. We see that there is a ramp-up coming. And also MedTech, to me, excellent result for the fourth quarter. And that also goes to show in the post-pandemic world, plasma business has increased substantially because the demand for health services in total is normalizing, and that comes in helpful for businesses like that. And with nutrition, we've got a large segment within Kabi which is growing, which is doing good, and which was also impacted by the tenders and the combination of tender activities in China. But it still is a fundamentally attractive market for us, which will also see positive development looking ahead. So I think the ambition ranges that we defined are just the right ones in order to monitor performance along the way and to provide us with incentives to get into those ranges. And combining that with the revenue growth that we are seeing, that we will be seeing in 23, then I believe 2023 is not going to be an easy year for us, but one with a very good outlook and perspective.
Thank you very much. So connection in the rural area really worked out well. And now we will hear Mr. Jobs, who's also online. Okay, hello. I hope you can all hear and see me. Yes, working out fine. Thank you. Okay, so you have partially answered my question already, but I still wanted to follow up on Helios in Germany, or rather on the focus on the Helios business. In past years, if you look at it, the Spanish business had always performed better than the German one. In Germany, the inpatient numbers are stagnating, and they have been stagnating for years, apart from the gyrations that were caused by the pandemic. And in addition, in Germany, we are currently looking at a financing reform in hospitals. So the flat rate per case system, that will be revised. And in addition, we are also facing a hospital reform in the context of which the number of hospitals is to be reduced. So against this background, why are you so confident that the Helios Germany business will be able to advance their margins, so not only keep them stable, but even boost their margins? Okay, let me start, and then maybe my colleagues want to add something here. So first of all, for Helios, we stated that it was an excellent result, or it would be an excellent result, if the margin stayed at what it is, because it is already best in class. So here we need to generate revenue growth, and that will have to be a positive effect then on the margin. So additional revenues, and if you have the same margin, obviously your profit will increase. Patient numbers, Ms. Henneken has already explained that. The structural reforms are still ongoing or being discussed, but we believe that the reforms are necessary. In my statement, I mentioned that we believe there is still a lot of potential if we interlink the inpatient and outpatient treatments more closely. And I think this interconnection is a market trend we have identified and we want to go along with. And then, of course, it depends on the quality of the treatment and care that you offer, because that will attract patients. And the Helios clinics are really top-notch here. And something else that is to be seen as positive in the reforms is that overnight stays. That's something we are expressly backing in order to achieve better utilization of our capacities. Not everybody has to offer everything. You need more specialized centers or clusters here. So we think that's a positive approach. And if you closely look at the patterns that are the foundation to such reform discussions, I think we can say that it fits quite well to our Helios approach. And then also we are focusing on quality. And via quality, you can really leverage efficiencies here. But as I have mentioned, the discussion is still ongoing, and then the federal level and the federal states, they have to get together and discuss that. But yes, it is true. Maybe there are too many hospitals here in Germany. That might be the case, it's true. But then, of course, we have to look at the federal, state, or municipal level. And then let's look at Spain for digitalization, because that is the next big thing. Digitalization platforms, they will also provide better access to patients. And with that, you can also manage patient flows. Not everybody has to go through a brick-and-mortar investment.
Okay.
All right, thank you. So let's look into the room again. Are there further questions? Yes. Ms. Casella. Yes, on the virtual annual general meeting, there was a bit of controversy and, let's say, resistances of the shareholder representatives. You will have a virtual one this year. What's your position on that? Will you only have virtual AGMs from now on, and I expect the extraordinary meeting to also be held virtually? And with regard to assessments or valuations, don't you think there will be a markdown in valuations because shareholders will punish you? And in combination with the KGaA, which might also lead to a markdown, and your indebtedness, wouldn't you say that it might make sense to pay more heed to the capital market? Well, the next annual general meeting will take place as you have described it, and I think that can no longer be changed. So at some point, you just need to make a decision, and usually there is a number of months that lead up to this decision, and if you plan such an event a couple of months ago, you have to make that decision and decide what to do. So in light of the pandemic situation back then, we decided to go with the safe option of having it virtually. In the open democratic shareholder culture, I think it also makes sense because more shareholders can participate if you have a virtual meeting. And plenty of companies have already tried and tested that. I think it's a modern way to do that. So what we're going to do in future, we will see that. It really depends on the framework conditions as well. And the extraordinary annual general meeting, to be honest, we haven't really thought about that yet. It will be held in a way that it can be done efficiently, but the shareholders who have to decide on an important topic will be able to let us know what their voice is here. Okay, no further questions. So with this, I think we can wrap it up. Thank you very much for coming here, for participating, and also for this very interesting conversation and discussion we've had. I'd also like to thank the colleagues here on stage, and if you have any questions, feel free to contact us via telephone afterwards. And with this, I hope you will have a very successful and nice day and have a good trip back. Thank you, and see you next time.